look, most traders are solving the wrong problem. They spend all this energy hunting for the perfect signal, right? The invincible strategy, that hidden edge in the charts.
Mm-hmm.
But the real problem, the one that truly separates consistent profitability from just perpetual struggle, isn't out there. Not really.
No, it's internal.
It's internal. It's in the process, the discipline, the psychology behind every single choice you make.
Mm-hmm.
Or, maybe more importantly, the choices you fail to make.
That's right.
So, this deep dive, it isn't about chasing indicators. We're dissecting the foundational framework elite traders live by. It's based on our source material, the 3 pillars of professional trading. Think of this like a precision operation. We're here to recalibrate your approach.
And what's fascinating, truly, is how this holds up. I mean, across all markets, all time frames. Doesn't matter if you're trading stocks, options, Forex, whatever.
Universal truth.
Pretty much. Every single trade, every one is a process. And the data backs this up hard. It's the quality of that process, not just the outcome of one trade, that dictates your long-term success, sustainable success.
Okay. Our sources, they lay out 3 critical C's, 3 pillars, you could say. They're the foundation separating the pros from the strugglers. Mindset, execution, and journaling.
Mindset, execution, journaling.
And this isn't just theory, right? It's not opinion. This is the operational blueprint.
Yeah.
Tested, proven.
Okay, let's unpack that. First pillar, mindset. You called it the psychological gatekeeper. So before your finger even gets near that buy or sell button,
Right. Before anything else.
there's this critical question you have to face. It's raw, it's direct. You got to look yourself in the mirror and ask, if this trade loses, am I going to be completely satisfied with how I handled it?
Exactly. And that's not soft stuff.
No, it sounds like a cold, hard premortem.
It is. It forces ruthless self-assessment. Mindset isn't about just thinking positive thoughts. It's your risk management foundation baked in right at the start. It forces perspective. Is this really my trade?
My trade based on my rules, not a feeling. Precisely. Your conviction, your edge, your written plan. Or are you chasing something? A feeling, a hot tip, market noise? To answer that honestly, the sources point to 3 specific checks you must make before the trade.
Okay, what are they?
First, setup quality. Is this a high probability opportunity? Does it rigorously fit your established edge, your proven edge?
So not just any setup, but one that your own work shows has a statistical advantage.
Exactly. Are you seeing your pattern or are you trying to force it? Find your best trade, not just any trade. That's the key distinction.
Got it. What's second?
Second, risk assessment. Is the potential loss genuinely within your emotional and financial tolerance? And crucially, within your predefined risk limits per trade?
This isn't about avoiding losses then.
No, losses are part of the business. You have to accept that. This is about accepting them, but on your terms, by design, before you even click the button.
So it hits the stop loss.
It's part of the plan, not a failure, not an emotional event. You planned for it, this pre-acceptance. It cuts down emotional reactions later, big time.
Makes sense. And the third check.
Third, rule compliance. Are all, and I mean every single one of your trading plan conditions met? No exceptions, no, just this once, no shortcuts.
0 deviations.
0. If your plan says specific entry, specific stop, specific target, you stick to it, period. The core insight here, it's profound. The market decides the outcome, right? You don't control that,
Right.
but you determine the quality of your process. When you focus only on trades that would satisfy you, even if they lose, because you executed your process perfectly, that's where you find your real edge, your sustainable edge.
Wow, you control your decisions, your process. That flips the script for a lot of people, I think.
Yeah.
Takes the focus off predicting the market and puts it squarely on managing yourself.
That's exactly it. Ownership.
Okay, so you nailed the mindset, you clear that internal gatekeeper, you've got conviction.
Yeah.
Then what? You have to translate that into action, or
Yeah.
disciplined inaction.
Yes, and this is pillar 2, execution. This is where psychology meets the road, where intention becomes reality. And it's where many traders, frankly, fall apart.
Because it's not just about pulling the trigger.
Not at all. It's just as much about when you don't. There are 2 sides to this coin, and you need both.
Right, break down.
Okay, first, active execution. This is the discipline to enter and manage trades exactly as your plan dictates. No hesitation if the setup is there, risk defined, rules met, you execute.
Setting the stop where it needs to be, not where you hope it works out.
Precisely. Taking profits at your targets, not getting greedy, removing the emotion, the subjectivity from that critical moment. Mechanical in a good way.
Okay, that's the doing part. What's the other side?
The other side is passive execution. And honestly, this is often tougher. It's the profound discipline to not trade when conditions aren't right.
Resisting the urge.
Resisting the urge to chase, avoiding that low probability setup just because you're bored or feel like you should be trading, staying out when you're tilted or emotional.
And the data shows this matters.
Hugely. For many struggling traders, the biggest hits don't come from one massive bad trade. They come from lots of small, unmanaged, unplanned trades, impulse trades, boredom trades. The professional truth here is stark. Your best executions often happen when you're not trading.
Say more about that. An avoided bad trade is as good as a winner.
Absolutely. Maybe even better. It saves capital, sure, but crucially, it saves mental capital. It prevents that downward spiral.
So that passive execution, deciding not to trade, that's really counterintuitive, isn't it? People feel like they need to be in the market.
It is counterintuitive. Our brains crave action, reward. FOMO is real. It's powerful. Not acting feels like losing. But true professionals understand preserving capital is job one.
Right.
Execution without knowing when not to execute. It's like driving blindfolded. Yeah, you might get lucky for a bit, but you're way outside sustainable parameters. Your plan needs to be so clear, so ingrained, that execution, both active and passive, becomes almost automatic.
Not robotic, but removing the emotional noise.
Exactly. It lets your research process take over. And linking back, execution forces the question, do I actually walk my talk? Do I do what I say I'll do?
Okay, mindset clear. Execution handled either action or disciplined inaction. What's the final piece? You said the real leverage is built here.
Yes. Pillar 3, journaling. This is your learning lab, your improvement engine. Without it, real growth. It's basically impossible.
Because trading isn't perfect. You'll never nail it 100%.
Never. Markets shift, patterns evolve, your own biases creep in. There's always room to refine, always room to get better. And journaling is how you do it systematically.
What does effective journaling look like? Sounds like more than just writing down P&L.
Oh, way more. The key phrase here is brutal honesty. You have to journal every single trade, every decision point, no exceptions.
Even the small ones. The ones you took on a whim.
Especially those, the trade you didn't take seriously, the one with tiny risks, the one you knew you shouldn't take. Log it. Ruthlessly.
Why especially those?
Because that's usually where your process broke down. That's where the behavioral flaws hide. Journaling isn't a chore you tick off. It's your single most valuable learning tool. It's your after-action review. The data is clear. Skip this. And your long-term performance likely flatlines. You're literally throwing away actionable data.
Okay, so what are the concrete outcomes of doing this diligently?
Two main things. First, pattern recognition. You track your emotional state before, during, after. Were you anxious, overconfident, frustrated? You log market conditions. You score your execution quality.
Score it, like 1 to 10.
Exactly. Did I follow my plan perfectly? That's a 10. Did I completely wing it? That's a 1. Over time, this data reveals your biases. It highlights the setups where you consistently perform well, your sweet spot, and it pinpoints your recurring mistakes. It's about understanding yourself in the market context.
Got it. Pattern recognition. What's the second outcome?
Second, continuous refinement. Journaling turns that raw data into actual insights you can use next time. It lets you objectively see what worked, what didn't, and why.
So the framework for each journal entry should capture specific things.
Yes. The sources are clear. Emotional state before and after. Your execution score, 110. What did you learn from the specific trader decision? And critically, what's one thing you will focus on improving next time? Just one.
One thing. That sounds manageable.
It makes it actionable. It forces you to ask, how do I actually get better? You can't improve what you don't measure and analyze. Journaling forces that improvement. It's your self-correction mechanism. It's what separates stagnation from professional growth.
Okay, these 3 pillars, mindset, execution, journaling, they're not separate boxes to check, are they?
Not at all. They feed into each other. It's a loop, a virtuous cycle. The sources call it the trader's flywheel effect.
The flywheel effect, like that heavy wheel, hard to start, but builds momentum.
Exactly like that. Getting it started takes real discipline, real commitment. But each cycle, mindset check, disciplined execution, honest moody. Journaling, each completed cycle adds momentum. It makes the next push easier, more powerful. It drives compounding improvement.
So let's tie it back to those core questions. Mindset forces perspective. Is this truly my trade?
Right.
Execution forces application. Do I walk my talk? Am I acting or not acting according to my plan? And journaling forces improvement. How do I get better? How do I learn from this experience?
That's the loop. And this isn't just a nice idea. The data, the results, they speak for themselves. Our research shows consistently top performers live this process.
And the improvement is measurable.
It is. Each completed cycle, done right, makes you incrementally better, maybe just 1%. But it compounds. After 100 cycles, 100 deliberate trades processed this way, you are statistically, behaviorally, a different trader.
Unrecognizable from the start.
Unrecognizable. Your decisions are sharper, your emotions more resilient, your edge clearer. After 1,000 cycles done with this rigor, the market starts to feel less like a casino and more like your field of operation.
And this comes from the process, not luck or secrets.
Absolutely. It's built on consistent, precise execution of this process. Cycle after cycle. That's the engine of mastery.
All right. Powerful stuff. So now for the challenge. The direct challenge to everyone listening. You have the blueprint now. You understand the pillars. The real question is, do you have the discipline to actually implement it?
That's the million-dollar question.
This isn't academic. It's a mission directive. So here it is, starting now. For your next 10 trades, apply this framework rigorously.
Every step, every trade.
Before each trade. Honest mindset check. During. Ruthless execution discipline, active and passive. After. Brutal honesty in your...
You're like...
Dissect your performance.
Yipping.
Then compare. Compare the results. And not just P&L. Look at your process quality. Compare that to your previous 10 trades where you probably weren't doing this.
The difference will be telling.
The difference will shock you. Not just the numbers, but how you feel about your trading. Your future self is counting on you to do this. Find out for yourself. DM us at Trading Edge. Share your findings, your challenges. Engage. This is where the real work starts.
Look, the market doesn't care about your feelings. It really doesn't. It doesn't care about your excuses. It just reacts to action or disciplined inaction. The only question left is, will you care enough to fix this? To build this unbreakable process, one trade, one cycle at a time.
That's the challenge.
Stop chasing the market. Start mastering yourself. Trading an edge where psychology meets profitability.